The currency looks like it's been a fairly big factor in terms of these numbers. Stripping that out, what does the underlying business look like right now?
The underlying business is looking good from a top-line perspective. The categories that we're in are growing faster than they were before the pandemic, which is biscuits and chocolate in our case. We see demand all around the world, very strong in North America, Europe, emerging markets. And while the global growth of our categories used to be around the 3% mark, we're now well above 4% and sometimes at 6% in the case of chocolate. So all that is good. Our market shares, we have increased market shares compared to before the pandemic. And we did well in Q4 as it relates to the bottom line. But if you look at the middle of the P&L, I would say that's where it was a little bit more difficult. Still okay, 3.6% growth in gross profit. But we normally aim for 4%, and so we were a little bit below that. And that's a reflection of what you were mentioning, Guy, supply chain disruption, inflation, labor shortages, and that weighs on our costs. Pricing will kick in, and that will solve that problem in the coming quarters. And then there is currency, which in 2021 was a tailwind for us. In 2022, we expect that to be a headwind of about probably 8 cents on our EPS and about 2.5% on our top line. We still are expecting to deliver against our growth algorithm, which is a 3% plus top line growth and a mid-single digit bottom line growth. We will still do that, but we will, in reported results, we will see that effect of the currency.
Dirk, let's talk about the pricing point in particular, which you mentioned. To this point, by and large, consumers have seemed tolerant of higher prices. At what point do you think that tolerance changes? How do you gauge that level of how far you can push it before it starts to affect demand?
Well, this has been so abnormal, I would say, that you almost have to gauge it as you go and see if the price increases have any effect on your volumes. As everybody has been saying, and we're seeing the same, so far, price increases have not had a lot of effect on volumes. The reason being, to my opinion, a few. One, consumers feel financially pretty good. They saved during the pandemic, so they feel like they're in a good place. Overall, there's a labor shortage, so people are well employed. They see their salaries go up. They've also changed their spending, less discretionary spending, less travel, less eating out, and more importance to the home life. And so they're prepared to spend more on what they are consuming at home. And then our products are not that expensive. They're an affordable treat. So all that makes that our categories normally don't have a huge price elasticity, but in this particular case, it's very limited. I assume as the consumer will change and we get out of the pandemic and they start to spend more on other items, that then, and they start to eat out more and so on, that's where the moment comes that they might not be so benign as it relates to the price elasticity.
Let's just talk about where the consumer is right now, Dirk. We've come through Omicron. That looks now, it's now going to fade. As you say, that means the people will ultimately maybe be looking to go and eat out a little bit more. But what have they been doing during the pandemic? Have they been stocking up? What does the consumer's working capital look like right now? Is the larder full? And does that mean that there'll be a bit of an overhang in terms of demand for product?
I think in certain items they did, not in ours. I would say they get consumed. I think what has changed in the world of snacking is that there is a change in mentality where snacking more often to feel better, to have a little bit of stress relief, is seen more acceptable. And we just published last week our State of Snacking report, and that's one of the key things that comes out of there. 80% of consumers say now, indulging once a day, having a chocolate or a biscuit is very acceptable. If you go 2-3 years back, that was not as high. And so in our case, it's not stocking, it's really more consumption that's going on.
So changes in consumption behavior, are there any pandemic era changes that you don't think will stick, Dirk?
I do believe that the mobility will come back. Consumers at the moment spend 10 to 15% more time at home. I think once they feel more safe and they feel better, and COVID is now endemic and we know how to control it, I think there will be sort of a return to mobility, which will have all types of side effects. Less online buying, potentially more on-the-go buying, more travel, more eating out, as we were discussing. I think that is not going to stick. Probably the other one that is not going to stick is the amount of time that is being spent at home. I do think people will go back to the office more, and so as a consequence, the home consumption will come down, and on-the-go consumption will go up. But for the rest, what else did we see? We see much higher e-commerce, online buying. I think that will still remain the same, for instance.
Dirk, as you say, people are starting to go back to work, and I'm sure that probably applies to your business as well. Can you just talk me through what it's been like over the last few weeks and months in terms of staff outages, what you've seen in terms of the production lines? Have you had any issues there? Have there, for instance, has there been any demand out there that you haven't been able to fill because of what has been happening with Omicron?
Yes. I would say we've certainly seen an increase in absenteeism, and in our offices, that was not really an issue because we were still working from home. We delayed the reopening of our offices. In our plants and in the fields, our sales force, that is a bigger issue, of course. It hasn't been worse than it was at the start of the pandemic, where there was the famous tracing, and if you had a contact, you had to stay at home. So the absenteeism level that we've seen has been similar to the start of the pandemic, which does have effect on our potential or our possibility to supply the different orders. Add to that on top the labor shortages, add to that the transportation issues, and yes, we measure something called on-shelf availability, which we like to be well above 95, at least 97%, which means of all the items you expect to have in a store, 97% is there. We're now more at 90%. So yes, the availability of our products has been affected by this.
Obviously, when we're talking about Omicron and pandemic-related impacts, in China, there's a very specific story. It is a COVID-0 policy. We pay a lot of attention to that. When we're thinking about China and other markets in the emerging world relative to the developing one, what differences and divergences are you seeing in terms of how it affects your business?
We still have markets around the world where the whole country needs to go down in a severe lockdown because the use of vaccines is, or the availability of vaccines is not as high. And so at the moment, it's Southeast Asia that is severely affected. And so we have issues like we need to stop our plants for a number of days. We cannot have our sales force go out. Stores might not be open. So that severely affects our business. That sort of moves around the world. We'll see, for instance, what's going to happen now in Latin America as Omicron is starting to appear there. Vaccination rates in Latin America are relatively high in the most important countries. So I assume it will not have the profound effect as we are currently seeing in Vietnam or in the Philippines and so on. For the rest, it just interferes. If you look at the US and Europe, where vaccination rates are relatively okay, I would say, it just puts us back into this sort of crisis mode that we had during the beginning of the pandemic, where we have to focus on a limited number of SKUs, where we have to sort of manage attendance on a day-to-day basis, and it disrupts normal operations.
Dirk, this is going to sound like a strange question. What is hot in snacking right now? What do you see the trends being? What is going to be interesting? And how do you think you're going to take advantage of any of these trends? Is it organically? Is it via M&A?
For sure, although I was talking about the indulgence factor, that is something that is quite unique. Suddenly, the consumer saying, "Hey, it's okay to indulge myself every day." That is a big change of mentality, and so you will see heavy indulgent items like premium chocolate and so on. That will do well. The other one is that health and wellness is still there, and I think that trend will come back as we feel better about the pandemic, and that will continue to grow. So, for instance, we've launched in recent months, we've launched an Oreo zero sugar in China, or we have launched a Cadbury vegan in the UK, a Philadelphia vegan in the UK, plant-based. So I think those are some of the trends that you will see. It's sort of a yin and a yang, heavy indulgence or higher indulgence, while at the same time, health and wellness keeps on growing gradually, and more consumers are going to do both. And so that's really what is quite unique about this situation.